You're watching the Crypto Market Update with your host, Chris Marshall. Your home for the latest crypto news, reviews, and updates that can be found around the blog. If this is your first time here, then we would like to thank you for watching. If you enjoy the show, please like, subscribe, and share with anyone that you believe needs this type of content in their life. Just a reminder, anything discussed on this show is for educational and entertainment purposes only and should not be considered financial advice. With that out of the way, let's get on with the show.
What is up? How's it going, everyone? This is your crypto market recap where we take a look at the events that have happened throughout the week in the crypto sphere that may have had an effect on your favorite crypto. I'm your host, Chris Marshall. With that, let's take a look at our sponsors. Customerify. First one, it's the easiest way to collect user feedback. Go check them out at www.customerify.io. Quickly and easily set up an account, and you can, after you set up your account, real simple stuff, easily set up a campaign to collect user feedback. A couple different types of feedback you can collect: simple emoji, some text answers, full-on reviews, all that good stuff. As soon as that's done, it's like 4 steps. It's going to put out a bit of HTML code. You just copy and paste that, and you can put that right into your web site. If you manage your own website at like GoDaddy, really easy stuff. You can put into email marketing campaigns like MailChimp campaigns, stuff like that. Go check them out, www.customerify.io. Next sponsor is OTEC, Ocala's Blockchain, Crypto, and Technology Innovation Council. If you're into tech and in the Ocala area, go check them out. They have an event coming up on the 7th of June, I do believe. They will be doing a tech talk, which is kind of like a TED talk, but something in tech for the local, anybody locally can come and attend this. I believe this one's going to be on Blockchain 101, so go ahead and check that out. Find out more about them at www.facebook.com/Ocala Tech Council. Good, sponsors are out of the way. All right, let's move on to our market coverage. Let's see what is happening right now in the markets. So cryptos today, we're over here on CoinMarketCap. Cryptos today, we're at 19,500 cryptos. Exchanges, 527. Market cap still sitting just above $1.25 trillion. 24-hour volume at 77,000. It's actually the lowest I've seen in quite a while. Bitcoin's dominance today sitting at a 44.6 with ETH at 19 flat. And gas is down to 36 Gwei. Going to be doing some transacting on the ETH. Right now might not be that bad of a time. All right. Most things this week are down with a few exceptions. Overall, I think we're holding actually fairly decently. This is overall pretty flat for the week. But yeah, let's take a look at some of these other coins. There's some really big losers. Polkadot, Avalanche, a couple other ones are down in the teens I've seen a couple of them down in the 22% overall for the week. But some things are up. Let's scroll down just a little bit. Cosmos, Monero, up 12% this week. Digging that privacy coin, right? What else we got? Zcash, same thing. Privacy coin coming up at 11.76% for the week. That's great. KuCoin token. I wonder if there's just more people getting on KuCoin. I use KuCoin, and it's not anything like super special. So I wonder if they just got a bigger audience base or something going on this week. Maker overall kind of sitting flat for the week. A couple other random stuff, but nothing too important. Let's go ahead and take a look at the crypto fear and greed index. Today we're at 13. Yesterday we're at 13 as well in extreme fear. Last week at a 10 overall. That was when we had the major portion of the crash. And last month overall a 27. If you're not familiar with the crypto fear and greed index, some people like to use it as a timing tool when they want to enter or exit the markets. So it's It's just an indicator. A lot of people think that when the market is overall fearful, that may be a good time to buy in, as we may be at a bottom. And when the market is overall greedy, that may be a good time to sell because we might be reaching the tops. So use that at your own discretion. Move on over and take a look at some charts. All right, you'll notice that my Bitcoin charts are pretty clear, actually. I decided to erase all of the lines finally. If you've been following for a few weeks, you'll notice that, or you'll know that on this chart down here, the second Bitcoin chart, I was getting quite a few lines. And after we kind of broke out of that pattern, I was like, you know what, let me clean this up so we can see what's going on. So let's start over on this one here. First is the Bitcoin US dollar pair on Coinbase. And as you can see, we've made a movement down, and now we've been holding this like 28.6 line right here, which is interesting because this is where we came down, and first we tested this line way back in January of 21, pre-COVID. We came down and tested this after we had this big run up at the end of 2020 into 2021, and then we came down, tested 28.6. We had the COVID run up starting in like February and ending in like May. And then we came down and we touched this at least once for sure. But kind of had like 2 tests or 3 tests of it overall. We got down to like 30,000. Then we hit this 28.5 and then 28.8. So about 3 tests of this support line here. And now what you see is we came all the way back down over here, and we did go under it, but just for a very brief time. And right at the very height of this bearish movement down on the 12th. And then we shot right back up within the same day. So if we zoomed in on this, I think it's all relatively quickly, rolling down there for a matter of a couple hours. A very big bullish movement up with quite a bit of volume, getting us back up above this green level. And now we've come down and hit it multiple times in the last few days. Let's go on over to a 4-hour chart for this portion. So we've come down and we've hit it now on our 3rd time here. But you'll also notice that we are forming this downward sloping pattern. So this is still a bearish pattern. Bearish flag, bearish pennant. There's a couple different ways you could draw it out. I'm not going to get too particular on which pattern it's going to end up being. It's a bearish pattern. So that doesn't mean that we're going down. Before I move into the next chart, my other Bitcoin chart, and take a quick drink. All right. So let's check this out real fast. If we go over to this Bitcoin chart, I drew something interesting. I'm going to show you this here first. So this is where we're currently at. And if you were to look here back in November, November-ish, when we hit the peak at, what was that, like 68 or something like that, thousand, we started to form this massive bearish flag pattern here over the course of the next few months. Up until here just recently at the end of May, the beginning of May. So we have our flag pull, we have our flag pattern here, the parallel channels that make up the flag pattern. And if we copy and paste this flag pull and drag it over here, that would state that we should see a bottom of about $12,000. That's where this pattern should play out. It's kind of like A, B, C steps, step 1, step 2, step 3. This is where pure technical analysis comes into play. There's other things to look at. What I want to show you is this correlation. I'm going to go over to the daily chart for this. The correlation between what's happening now and what's going on after we had our massive run up at the end, or at the mid 21 in COVID, and then we formed this massive bearish flag pattern right here, and we came down and we touched this $28,000 level multiple times. And if we were to have played out this bearish flag pattern, we should have came down to this like $12,000 level. That's where we should have come up or come down to if this pattern played out. And now what we have going on is we have the same thing where we formed a bearish flag pattern, and if you just look at the chart and you take into account just technical analysis, we should end up at $12,000 again. That's where both of these are saying that we should end up, somewhere around in that range, 11 to 13, 12 to 14, something like that. You know, we have fairly similar, you know, volume going into where it was. So we had a massive run up in volume at the very bottom here, and then it kind of cooled off. It was still a little bit higher than normal, you know, over the next few weeks. And then volume started to decline, but we still had some really good price action going up. And now what we have is a big, drastic, sharp incline in volume. And it's still too early to tell where our volume is going to be at for the next few weeks. But if it does look like it's higher than, I'm not going to be able to zoom in on that, but it does look like the volume could be a little bit higher than what we were right before. And then if you take a look at the RSI, back here when we had our first initial drop, we dropped down below this 30. We dropped under 30 on the RSI. And then we had our massive drop to start the formation of the bullish flag pattern, right? Dropped down, started the formation of the bullish flag, dropped under. Drop down, start of our bullish flag. We dropped under 30 on the RSI again. And then what we noticed is we had a nice little climb up, dropped pretty much real close to that 30, and then shot up real heavy. And now we've had some nice movement up. This is a much more extended time. I mean, you're talking this first the parallel channel played out in a matter of a month, and this one here is took about 2 months to kind of play out, so much longer time frame, but the RSI has come up and now we drop back down below. So I don't know, I'm not saying that, you know, we're about to see new all-time highs. What I am saying is that it's very interesting. We have strong reason to believe that we should have hit 12,000 already. And for whatever reason, the psychology of investors, at least at this time, wouldn't allow us to really break through, not really in any real way, break through that $30,000 level. Now, they're talking about the psychology of investors at the different times. Is the big difference of what was going on in this time was we still had everybody and their mother in crypto saying, hey, Bitcoin to 100,000, Bitcoin to 250,000. By the end of 2021, we are going to see $100,000 Bitcoin. So when it dropped to $30,000, there was still a lot of people willing to buy. A lot of money was still being funneled into the average person's pocket by the government to go ahead and, you know, spend on whatever they want. And so we had a reason, a psychological reason why that $30,000 level could have held, and we ended up seeing all-time highs. It's a completely different psychology going into this scenario here. Whereas now we're not, you know, all shouting, hey, Bitcoin to $100,000, you know, by the end of the year or anything like that. There isn't a flood of money. There's inflation going on. There's a lot more economical things going on. So I'm of two minds, really. You know, like I think we either see us hold and recover from here, or we're going to see, you know, about a $12,000 Bitcoin, give or take, you know, a little bit. I think that is definitely where we're going to go. And if I had to guess, and if I had to plan, I'm going to plan that, you know, it's probably going to go down. So I'll zoom in here and show you what I'm really looking for right now. For the most part, I'm watching the 1 and the 4 and the 1 hour, the 4 hour, and the daily charts. And I'm mainly just watching to see us break above this line here, which would put us like in the current times, roughly above. It'd have to be above $30,600 right now. We need to close above this on at least the 4 hour, if not the daily, and open up above this and stay above this for probably like a whole day. If we could do that, I think we could start seeing a nice little recovery, and the threat of us, breaking back underneath this 28.6 level and falling down to 12,000, 14,000 is probably not as great. But I think if we drop below this, and I think this weekend is going to really tell us, if we end this week, in the red, typically when Fridays are red, we end up having pretty negative weekends. So there's a good chance that we see, a pretty bad weekend, which stinks. I don't want to have a bad weekend, when it comes to crypto. I'd love to come in on Monday and be like, yeah, we broke above it to the moon, I haven't even heard anybody say to the moon recently, So yeah, I think what I'm really looking for is like a nice, good, solid close above this resistance line, and that's going to tell me that we're probably going to start seeing some good upward movement. What we could easily see is something along the lines of, let's go, where's a drawing tool? We may end up from here coming up above. If we could close above it, maybe we come back down, we touch the line, even maybe possibly we just play in this room for a little bit, break above, we come and test, maybe test right about in here. There we go up. It's gonna be hard to say. I think we're in this triangle for a few days left, for a few days more. But yeah, it's not looking good, in my opinion. If I had to put some numbers, some percentages to it, I'd say 65% chance of going to 12 to 14,000, about a 35% chance of staying around this level for a while before we start a recovery. So that's some of my TA, feeling out the market, kind of keeping the pulse on the mentality of all the big people. I'm even starting to hear a lot of the other news channels, independent news, crypto news, YouTubers and stuff like that, TikTokers, be a lot more bearish. So a lot of them have stopped really, spouting that bullish agenda that they got typically, which is fine. I'm both bullish and bearish. I think there's room to be both, but yeah. So just keep your heads on a swivel. Be watching the charts. Be looking for a break above this line and a hold. We need candles to close above this line. The higher the candle, the higher the time frame candle that closes above this line, and the next one that opens up and stays above that line, it doesn't immediately fall back down. That's what we're going to be looking for, is some good solid time staying above this red line. And if we break down below it, doesn't mean it's the end of the world. We could be forming a pennant. If we fell below about 25.4, it looks like this 25.4 line, we fell below it, that would be pretty bad. But if we're just forming a pennant here, that's pretty symmetrical, so if we're forming this bearish pennant, then what you'd be looking at is a bearish flag pattern playing out, in which case you could say that either this is the flagpole, in which case you'd move this down to here. And we'd be looking at a 15,000. You could even say that this is the flagpole. And we'd be looking at, shoot, $7,000 Bitcoin. So if I had to guess, that this would probably be the flagpole here. The true pattern, this bearish pennant pattern. So that's the one I would probably go with. It's from there to there, there to there. That's probably where we'd end up, about that $15,000 level if we play in this pennant. That's if we break below this 28.6 line, but stay above the 25.4 level, somewhere around in there. All right, I think that's enough with the charts. Let's move on to some stories. All right, so we got a new Republican bill would protect some crypto investments in retirement accounts. I think that's a great idea. Let's protect these 401ks from something like a Luna happening. A Luna crash happening to some of these retirement accounts that could really wreck some people. So who actually introduced this? Byron Ronalds, Republican from Florida, home state now. Great. And it's the counter argument to all the stuff that the Democrats have been saying. Crypto's bad. We need to ban crypto. We need to, regulate the crap out of all these stable coins so that nothing like this ever happens. He's putting this forward as his counterpoint to all the stuff that they want to do, which I think is great. So yeah, be checking. I'll keep you updated on this as it keeps unfolding. And then so not to be the YouTuber who's just putting out a lot of bearish articles, but there's more crypto destruction to come. Blockchain.com CEO says. So Peter Smith, CEO of Blockchain, says creative destruction is ultimately helpful in consolidation of the crypto economy, and there are weak protocols, assets, and investors still to be exposed after a recent market volatility. And I completely agree. That I had heard this report this last week, back when kind of car manufacturing became a big thing. There was something like 15,000 different car companies, tons of car companies here in America alone. And now we have like 3 car companies. And then the other one was the .com bubble. There was every single website, anybody that had a website was becoming a public company, getting listed on the NASDAQ and these publicly traded companies. And there's only a handful of like websites that are now publicly traded companies, like Facebook, Twitter. And so we had the same type of shakeout play out every time a new type of industry came out in our economy. And so is this the latest thing? I mean, we have 15,000 cryptocurrencies, as of today. 19,500 cryptocurrencies as of today. So are we about to see the similar shakeout where tons of these coins are just going to go away? I'm a big believer that a lot of these decentralized apps and all this stuff, they don't need their own coins. There's no reason why. I've built and architected and thought of a bunch of different like architectures to different protocols individually that there's no need to build a coin around it or to put my own coin into it. I can operate it on any other platform. So why do all these different projects need their own coin? It should just be, how are the coins that they hold allocated? And that's more of what people need to start getting through their head is, how do we distribute Ethereum? People can use Ethereum to vote on our platform. We can take and accept Ethereum as transaction fees or whatever. We hold it, and then how does it get divvied up? You don't need to sit there and add your own coin to give people perks simply as a cash grab. That's what I think a lot of these 19,000 cryptos will we get to the point where there's only like 3 cryptos available? I don't think that's going to be a case. I think we'll have, think there's an argument to say that there should be a couple hundred coins, but I don't think there needs to be 19,500 or any more, you know, unless something very specific comes about. But I can't think of anything or any reason why we would need it. So, all right, moving on from there. So I don't know if you guys have heard about Miami Coin. Just a bit of a warning. I do own Miami Coin. I've owned it since like the first couple weeks that it came out. I just bought it and set it and forgot about it. And I wish I wouldn't have. It has lost a lot of value in the last few weeks, the last few months. But basically, Miami Coin, the first city-themed cryptocurrency, has lost nearly all of its value over the past several months amid a broader crypto market collapse. Miami Mayor Francis Suarez hoped that the cryptocurrency launched last summer would help him raise revenue and reduce income inequality. In the eyes of the mayor, were on the experiment. The cryptocurrency's value has fallen more than 90% from its September high of 6 cents on Coinbase. Its rapid descent has burned investors on the way down, muting the dreams of Miami city leader and possibly raising red flags for regulators now investigating cryptocurrency transactions. So basically, what they were hoping to do with this kind of project was raise funds for the city in an attempt to potentially one day get rid of taxes and stuff like that. And it was a very good idea. I loved it. There was it solved a lot of the moral dilemmas that like I saw in the world, and I was all for it. And so I put a bunch into it and let it sit and ride, and I don't regret it, but I do a little bit. I don't know if it's going to go away. I'm not going to really sell it. I mean, it's worth so little now. I'm not super worried about it. You live and you learn. But is there a chance for it to come back up? I think so. I think it's a good team, good community. And I think there's so many people that want to see it succeed, so many powerful people like Mayor Suarez. So I don't think it's gone and dead, but they definitely got some work to do. And there was some, being in the community, I could see some of the gaps that they have. They need some things. They are trying to come out with this thing called City DAO. I think that's a whole lot better of an idea than just the City Coin, but time will only tell. All right, let's move on to our last story. So large crypto losses may not become an instant tax write-off, but here's what you can do. So there's a recent change in some of how the capital losses are happening. Basically, we are limited to writing off $3,000 of a capital loss per year. So, for example, if you bought one Bitcoin at $60,000 and then you sold it for $29,000, you have a $31,000 loss this year. Now, what's going to happen is you can only claim if this was your only trade, you can only claim $3,000 of it this year. You'd have to spend the next 10 years claiming it to get the full $31,000 loss. But what's going on is, say you have $40,000 in capital gains from 2022. In this case, you can use the full capital loss of the $31,000 to offset the $40,000 capital gains. So it is still a net gain or loss that you're looking at for capital gains, which is good. It's just if you have greater than $3,000 in capital loss in 1 year, it's going to carry on to the next year. And so what they're going to tell you here, if you go and look this article up, is that you kind of want to time your sales, your lost sales, if you plan, say you have a coin that is dead. You put, tens of thousands of dollars into, and it's just a dead coin. Maybe it's UST or maybe it's Luna. It's a loss, but you haven't sold it yet as of today. they're saying that maybe you'll wait a year or two. Maybe you've made a bunch of money in that year from Bitcoin trades or some new coin that came out. Wait until maybe then to sell all of that, dead Luna or dead UST or whatever, and let that kind of that loss offset those future gains instead of taking them all when they occur. Maybe hold on to them. I don't know. I think it's a good strategy for hodlers. If you are if your strategy is the hodl through all market conditions regardless until that coin makes you a zillionaire, well, you're holding on to it anyways. Maybe wait, and if you do have a really good gain one year, sell something you're really far down on. So potentially, I'm not a financial advisor. I'm not a tax person. I'm not an accountant. So I don't know if that's good or not, but it's what this article kind of recommends. It's interesting. I mean, I don't really see the problem with, selling it. And even if I did have $31,000 of losses in one year, just constantly putting that $3,000 to each subsequent year, I don't think that's also, I think that's also not a bad strategy. So yeah, that's where it's at. Final look at the market. What are we doing on a really small time frame of the let's go like the 15-minute time frame. Came down, hit, forming a rounding bottom here. Maybe we go up. Maybe we go back down. We will see. It's always hard to tell. Anyways, that's it for today's show. I will see you all Monday morning for your crypto market forecast, where we will take a look at some events that are coming up next week, like the Coin Market Cap Conference that I believe is happening virtually. I'm going to see if I can get registered for that and sit on some stuff in the old VR. We'll take a look at that and some other events happening next week on Monday morning. See what effect they might have on your favorite cryptocurrency. With that, it's been real. It's been fun. It's been real fun. I will see you all later. Bye.